Thursday, April 23rd, 2026. Remember, I'm not a or your financial advisor. I'm just a regular blue-collar bus driver who found an easy way to invest with minimal funds and allowing time to do its job to maximize his retirement. Like and subscribe. The $1 Investor. This one needs to be handled differently because RVI is not a normal ETF. It is a new, publicly traded, closed-end fund built to give regular investors access to a concentrated basket of private frontier companies, and that means the upside story and the risk story are both very different from the other funds I broke down for you. Full breakdown. RVI, or RobinhoodVentures Fund I, began trading on the New York Stock Exchange on March 6, 2026. It launched at $25 per share, and Robinhood designed it as a non-diversified, closed-end investment company focused mainly on private companies operating at the edge of their industries. Robinhood introduced it as a way to give everyday investors access to private market names that usually stay locked away from retail investors. What that means in plain English is simple. This is not like buying an S&P 500 fund. This is not broad diversification. This is not a steady dividend machine. This is a concentrated venture-style bet wrapped into a publicly traded fund. The official disclosures say it is externally managed, non-diversified, has limited operating history, and comes with valuation uncertainty, illiquidity, and the possibility that the shares can trade at a premium or discount to the underlying net asset value. That right there is the first thing that matters. I'm not buying liquid public companies. I'm buying exposure to a group of private businesses that Robinhood believes are best-in-class frontier companies. Those are harder to value, harder to exit, and harder to mark in real time than ordinary stocks. That also means the quoted market price of RVI can move around independently from the official value of the underlying holdings. Now let's talk about what is actually inside the fund. Based on Robinhood's own fund materials and your screenshots, the main holdings include Databricks, Revolut, Mercor, Airwallex, Boom Supersonic, Ura, and Ramp, plus a meaningful sleeve in cash and cash equivalents. My screenshot shows Databricks at about 23.24%, Revolut at about 14.30%, Mercor at about 14.23%, and cash equivalents at about 19.78%. Robinhood also says the fund had 10 holdings and was categorized under US technology when I took the screenshot. That portfolio tells me something important. This is a high-conviction, concentrated, late-stage private company basket, not a spray-and-pray venture fund. Reuters reported that the fund launched with exposure to major private names such as Databricks, Revolut, and Ramp, and that Robinhood deliberately chose more mature, later-stage companies to try to reduce some of the risk that comes with early venture investing. Now let's talk cost. Barron's reported that RVI charges a 2% annual management fee and no performance fee. That is materially more expensive than an ordinary ETF, but it also makes sense for what this is. This is an access product. Robinhood is not selling low-cost beta here. It is selling a liquid wrapper around private market exposure that most retail investors otherwise could not touch. Now let's talk price action so far. The fund launched at $25 and my screenshot shows it around $24.75, while the NAV shown on the screenshot is about $25.31. The live market data now shows RVI around $24.43, with an intraday range roughly between $24.36 and $25.05. That tells me the market is currently pricing it a little below recent stated NAV, which is something closed-end fund investors always have to watch. Now let me deal honestly with the last 5 years question. The fund itself does not have 5 years of history. It has only been trading since March of 2026, and Robinhood only announced it in February. So there is no honest way to talk about a 5-year operating record for the fund itself. What I can say is that the broader private market theme behind it has become more relevant because more value creation is happening in private markets before companies ever go public, and Robinhood is trying to bridge that gap for retail investors. Robinhood itself framed RVI as part of its broader mission to open private market investing to everyday investors, and Wall Street coverage described the launch as a meaningful step in that direction. What does Wall Street think? The answer is mixed, but serious. The The bullish case is straightforward. Private markets have captured a larger share of innovation. The number of public companies has shrunk over time, and retail investors usually miss the biggest valuation jumps because those happen before an IPO. Robinhood is trying to let ordinary investors participate in that earlier stage of value creation. That is why outlets like Reuters, Barron's, and the Wall Street Journal all treated the fund as an important attempt to democratize private market access. The bearish case is just as real. Private company marks are harder to trust, exits can dry up, and a closed-end fund can trade below NAV for long periods. Barron's specifically noted that limited transparency and valuation challenges remain major issues, while Robinhood's own disclosures emphasize illiquidity, limited information, extra fees in underlying vehicles, capital call risk, and the possibility of material losses. In plain English, this thing can absolutely work, but it is not clean or simple. What I think analysts and professionals are really saying is this: the idea is attractive, but the structure matters. If you believe that private companies like Databricks, Ramp, Revolut, Oura, and others keep compounding in value before they ever hit the public market, then RVI could become a very interesting long-term vehicle. But if private valuations contract, liquidity dries up, or the market keeps discounting the fund below NAV, then shareholders may not fully benefit, even if the companies themselves are good. Now let's talk next 5 years. Nobody knows exactly what RVI will do, because the whole point of the fund is to own private companies with uncertain timelines. But I see 3 roads. The first road is the bullish road. In that world, private company valuations recover, some of the portfolio companies raise at higher marks or go public, and the market begins to trust Robinhood's private market wrapper more. If that happens, RVI could do very well because it already owns several names that are widely watched in fintech, data infrastructure, aerospace, and enterprise software. Reuters noted that Robinhood may eventually launch more funds in adjacent themes like energy, robotics, aerospace, and defense, which also tells me they view this as the first brick, not the finished building. The second road is the middle road. In that world, the portfolio companies do fine, but not spectacularly. Some grow, some stall, some stay private longer than expected. The fund keeps existing, but the market price floats around NAV or below it, and returns are decent but messy. That is probably the most realistic path for a product this new. The third road is the bearish road. In that world, private market valuations get cut, exits remain slow, cash sits idle too long, and the market discounts the closed-end structure. If that happens, this fund can absolutely disappoint even if the idea sounds exciting on paper. Robinhood's official disclosures make it very clear that these are illiquid, uncertain, frontier-style investments and that losses can be substantial. So my bottom line is simple. RVI is not a safe ETF. It is not a broad market ETF. It is not a traditional income fund. It is a concentrated private markets access vehicle, and that makes it exciting and dangerous at the same time. I can see exactly why it caught my eye. It is new, it is different, it is aimed at the frontier, and if I believe private innovation will keep outrunning the public markets, then this is one of the most direct retail access products I have seen, but I also have to respect the structure. This is one I would treat like a long runway, small size, high conviction position, not a core safety blanket. Like and subscribe, the $1 investor. Today I want to talk about RVI, the Robinhood Ventures Fund I. This one got my attention. And I'm going to be honest with you, I told myself I was done adding more funds. But that's the beauty of the market. Sometimes something shows up that makes you stop, look again, and say, hold on, this might actually matter. That is what RVI did to me. This fund is brand new. It started trading in March of 2026, so it does not have a long history. It does not have a clean 5-year record, and it is definitely not a normal ETF. This is a closed-end fund built to invest mainly in private companies. That means companies that regular investors usually do not get access to, and that right there is the whole reason this thing matters. Most of the biggest gains in the market now happen before companies ever go public. By the time the average person gets access, a lot of the upside is already gone. Robinhood is trying to change that with this fund. Now let me explain what is inside. This is not a giant basket of 100 companies. This is concentrated. Robinhood says the fund had 10 holdings, and the biggest positions include Databricks, Revolut, Mercor, Airwallex, Boom Supersonic, Oura, and Ramp. That tells me this is not built for average market exposure. This is built for high-growth private exposure. And right now, there is also a meaningful amount of cash sitting inside the fund. That matters because it tells me the portfolio is still early in its build-out. Now let's talk price. This fund came out at $25 a share. My screenshot shows it around $24.75. And the more recent market data shows it around $24.43. That means the shares are trading a little below the recent net asset value. And that is one of the biggest things people need to understand with closed-end funds. The share price and the value of the underlying assets are not always the same thing. Now, what does Wall Street think? Wall Street seems interested in the idea. Because private markets have become where a lot of innovation lives now. The public markets do not get first access anymore. That access goes to venture capital, insiders, and institutions. So the bullish case here is simple. If Robinhood can really give regular investors exposure to quality private companies, and if those companies keep growing, this fund could become very interesting over time. But the bearish case is just as real. Private companies are harder to value. They are less liquid, and this fund can trade below the value of the portfolio. So even if the companies are good, the structure can still be messy. That is the truth. Now let me tell you why I like it anyway. I like it because it fits the way I think. I'm always looking for where the future is going before everybody else treats it like normal. This fund is not chasing the obvious. It is trying to get in front of the obvious. And that matters to me, especially when I'm building for the next 20 years, not the next 20 days. Now let's talk about the next 5 years. I see 3 roads. Road number 1 is the bullish road. The private companies inside this fund keep growing. Some of them go public. Some of them raise money at higher valuations. And the market starts trusting this vehicle more. If that happens, this thing could do very well. Road number 2 is the middle road. Some of the companies grow, some stall. The fund keeps moving, but slowly. The returns are real, but uneven. That may be the most realistic path for something this new. Road number 3 is the bearish road. Private valuations get cut, liquidity dries up, exits do not happen, and the fund keeps trading at a discount. If that happens, this thing can disappoint badly. That is why I would never treat this like one of my safe core holdings. This is a frontier bet, a measured bet, a long-term bet, and that is exactly why I'm interested in it. For me, RVI is not about safety. It is about access. It is about trying to own a piece of tomorrow before tomorrow becomes obvious to everybody else. And I can respect that. Like and subscribe, the $1 Investor.